And before beginning, I would love to hear from you if you are seeking financial advice or have questions. I've put together a very short Google Form survey, the link is in the description, and I'm really interested to hear what your single most important financial advice question is. I have some fantastic quotes for you today from Jeremy Grantham. Grantham is a value investor and outspoken co-founder of asset manager GMO. Grantham's writing makes for easy quoting, as do his interviews and comments about everything he hears of. Grantham has made himself famous for being particularly astute to asset bubbles. His constant talking on bubbles makes him appear to many to be a perma-bear. My first quote is Grantham talking about how individualism can lead to success in the market. The individual is far better positioned to wait patiently for the right pitch while paying no regard to what others are doing, which is almost impossible for professionals. Next, Grantham tells us to trust our work and analysis when making a decision about an investment. If the numbers tell you it's a real outlier of a mispriced market, grit your teeth and go for it. We have next a warning about bias towards optimism. Grantham shares, "The investment business has taught me, increasingly as the years have passed, that people, especially investors, and I believe Americans, prefer good news and wishful thinking to bad news, and that there are always vested interests to offer facile, optimistic alternatives to the bad news." Does being a value investor to Grantham mean you're buying and holding? Not quite, as this next line tells us. Market timing, by the way, is a tag some buy and hold investors use to put down anything that involves using your brain. These are the same people who like to watch the locomotive coming and get run down in the name of discipline. Grantham's fund and newsletters have recommended foreign stocks as of late because of value opportunities abroad. It's not the growth overseas that Grantham finds attractive, as he explains. You don't actually find a strong correlation between top-line GDP growth and making money in the market. It seems like you should. The fastest-growing countries should give you the highest return. They simply don't. But there's only 4 of us that believe that story. Everyone else in the world believes that if you grow fast like China, you'll outperform in the stock market. What is Grantham bullish on? It is green energy and renewables that he really likes. He even helped set up a skyrocketing SPAC supporting a battery company. Shares that benefit from the greening of the economy will do much better than the rest. Anything to do with renewable energy, the electrification of the system, electric cars, etc. These are all going to have top-line revenues that dwarf the declining growth rate of the rest of the global economy. When the economy was recovering after the financial crisis, Grantham was critical of the Fed's monetary policy was primarily benefiting those already well off. He dropped this gem: "You can't run the economy on BMWs alone. If the average person is in a pickle, how do you have a healthy economy?" And another hard-hitting line, take this as a call to action. If stocks are attractive and you don't buy, you don't just look like an idiot, you are an idiot. Grantham is as outspoken about commodities as any other asset class. His story on gold is pretty similar to what you can hear from other balance sheet-driven value investors like Warren Buffett. Everyone talks about gold. This is the irony. Just as Jim Grant tells us, correctly, that we all have faith-based paper currencies backed by nothing, it is equally fair to say that gold is a faith-based metal. It pays no dividend, can't be eaten, it's mostly used for nothing more than useful than jewelry. I would say that anything of which 75% sits idly and expensively in a bank vault is, as a measure of value, only one step up from the Polynesian islands that attach value to a certain well-known large rocks that were traded. This next quote sheds a little light into how Grantham might see himself as a fund manager. "I like to be right. I try not to miss the big ideas, forget the little ones, and try to get them right." End of job description. Let's get back to Grantham the bull. His weariness of global resource shortages and environmental damage leads to this line of thinking: battering down solar cells on the roofs of Walmarts in California. I think they'll be some of the highest return investments that anyone ever makes. Grantham has an interesting opinion as to the source of volatility, and it's all about gamesmanship in the markets. Volatility is a symptom that people have no idea the underlying value, that they've stopped playing the asset game. They're not buying because it's a company with certain attributes, they're buying because the price is rising. People are playing games not related to any concept at all of what the long-term value of the enterprise is, and they know it. And I'll leave you with this thought by Grantham on green energy adoption into the future. The potential for alternative energy sources, mainly solar and wind power, to completely replace coal and gas for utility generation globally is, I think, certain. The only question is whether it takes 30 years or 70 years. Thanks a lot for watching, and don't forget to fill out the survey in the description if you are after financial advice.